This video is about the unbalanced volume indicator, or the OBV. It's actually a pretty powerful tool that can help you predict market moves by tracking the flow of volume. And stick around till near the end of the video. I'm going to walk you through a pretty killer swing trading strategy using OBV on a daily chart that you can start using right away, but after you backtest. And if you find this video helpful, make sure you hit that like button, hit subscribe, and let's get started here. So what is OBV? It's a technical indicator, and it was created by a guy named Joe Granville back in '63. And it's all about combining price and volume to reveal market sentiment. So what it does is it adds out volume on days when the price closes higher than the previous day and subtracts volume when it closes lower. That idea is pretty simple, but it's pretty powerful because volume will often lead price. If OBV is rising, it shows that buying pressure is happening. It's hinting at a potential uptrend, which means eventually more buyers will step in. If it's falling, selling pressure might mean a downtrend is coming. Think of it as a way to see what the crowd's doing. Unlike just the basic volume histograms at the bottom of your chart, it turns raw volume data into a trend following line that can confirm whether a price move has real strength behind it. Example is if stock price is climbing and the OBV is rising as well, that's a green light. Buyers are obviously in control. If price is going up and OBV is flat or it's dropping, be careful. That trend might not last. And it can even spot smart money moves. When you see sudden spikes in the OBV, that often happens before we see a big price jump follow, especially around news or earnings. Now, it's not perfect. No indicator is. It gives false signals in choppy markets and those sideways markets where neither buyers or sellers are dominant. So that's why you should really pair it with something else to confirm your signal before jumping in. But when you use it right, it can give you a pretty good edge by showing the market intent before price fully reacts to it. So why do you want to use it? Well, like I talked about, bullish or bearish before price fully shows it. But second, it can be great for spotting divergence. That's when price and volume tell different stories. So stock hits a new high. Any instrument, doesn't matter. But OBV makes a lower low. Well, that's bearish divergence. Buying pressure is fading and a reversal could be happening. Same goes for bullish divergence. Price makes a lower low, but the OBV makes a higher low. That suggests sellers are losing steam. It's pretty versatile. It doesn't matter whether you're trading stocks, Forex, or commodities. Just be careful with Forex. That's the broker volume you're seeing. I do suggest you look at futures. And it does work across markets as long as there's a decent volume data. And it's pretty good for swing traders like myself who look to catch multi-day trends on daily charts because it does smooth out that intraday noise, helps you focus on the bigger moves. So let's break down a practical swing trading strategy I mentioned using the OBV, and you can test this yourself. So here it is. It's a daily time frame. So this is built for capturing trends over a few days to weeks. And I've added a few tweaks to it to make it pretty robust. So make sure you grab a notebook, notepad, whatever, because this is something that you can start the setup. We're using a daily chart. We're going to add the OBV with a 10-period simple moving average overlaid on it. It's going to help us with our signals. Then we're going to add a 50-day and a 200-day SMA just to check the overall trend. It's bullish if the 50 is above 200, bearish if below, and if they're mixing together, it's a sideways range. We don't want to be part of it. We're going to use the 14-period ATR, the average true range, for volatility-based stops and targets. And you can add in a 14-period RSI to avoid overbought or oversold traps. So to enter a long trade, first thing you want to see is the 50-day is above the 200-day. Well, yes, bullish. Then you want to wait for the OBV to rise and cross above its 10-period SMA. That shows increasing buying pressure. Now make sure the RSI, if you're using it, is between 40 and 70 so you're not buying at a peak. Enter at the close of the daily candle after price breaks a recent swing high or resistance for extra confirmation. If you're going to go short, just reverse it. 50 is below the 200-day. The OBV falls below its SMA, and the RSI is between 30 and 60. And again, after price breaks a swing low or support. Third thing, exits and risk management. You got to set your stop loss. Here, we're going to set it at 1.5 times the ATR below your entry price for longs or above it for shorts, because we want to be able to handle the volatility in the market. If you're looking for take profit targets, look at 3.75 times the ATR for a pretty decent risk reward ratio. Or just take half off at a key level, trail the rest with a stop at 1 times the ATR below the latest swing low. Move your stop to break even once you're up 1.5 times the ATR. and exit fully if the OBV crosses its SMA against your trade and price breaks a key level. Don't fight the trend. You're not going to win. Think about only risking 1 to 1.5 of your account per trade, that's in percent, and make sure you avoid low volatility or choppy markets where the OBV can mislead you in trades. So here's one quick example. The 50 is above the 200. It's bullish. The OBV crosses up through its SMA. The RSI is at 55. It's good to go. Price is in a trading range. We get a spring. That's a rejection of support with a tail. This type of rejection is the only way I would enter inside of a trading range. Now, this is pure price action right here. Enter at the close of the candle or a break of its high. So here, ATR is 64 cents. So the stop loss is 96 cents. Or we're going to set it at $20.24, which is just below the entry candle. We're going to target the price of $24.80 above. A few days later, price makes the move, hits the target, goes sideways. We can also use a trend line break. Here, the OBV is above the moving average. The RSI is at about 47. Enter at the close of the candle to confirm the break. So we're looking at $24.50 for the entry. ATR is $1.33, which for our stop is just rounded to $2, or $22.50 for our stop. Our target is $7.50 or $32. And you can see that price did push up pretty nicely. And the reality is, you're not going to let price come all the way back to your entry after you're up this much, but it never does stop you out, and it does go on to hit the target. Now, if you're a new trader, you can tweak these rules to give yourself some confidence. Look for 1.2 times your risk. So if you risk $1, look to make $1.20 until you get the handle of it and you are making money more consistently. And as you gain experience, implement the more complex trade management rules. So a few final tips before you go. Always confirm the signals with price action, like a breakout or a candlestick pattern for a stronger setup. You got to backtest this strategy on your favorite market, see how it performs. Every asset is a little bit different. And don't just rely on the OBV alone. It can give you some false signals when the market's sideways and choppy. So use those moving averages and the RSI as filters. And that's it. Now you know what the OBV is and how you can use it in a pretty solid swing trading strategy. And if you're going to try this out, drop a comment with the market you're testing it on. I really want to hear about it. And if this video helped you, again, give it a thumbs up, subscribe for more trading tips, and hit that bell so you don't miss the next video. Talk to you soon.
Everything discussed here is our opinion, and it is not to be taken as investment advice because we are not your financial advisor, nor have we considered your personal situation as your fiduciary. This presentation is for your education and entertainment only. Please review NetPicks' full risk disclaimer and privacy policy.